Okay, traders, what's going on? Jamie Saettele here. It is 1 p.m. in New York on August 17th, 2016. How is everybody doing today? Fed minutes coming out in an hour. Um, Not really too much concern to me, to be quite honest. Actually, quite interested to see what the reactions are on the minutes. Might actually end up getting triggered on some positions on it. But let me know if you can hear me. Let me know if you can see the charts. And once I have some confirmation from the folks out there, I will get started. Good to go. All right, great. Okay, so we've got a couple yeses, so I'm going to get started. Um, First off, I think it probably behooves us to take a look at this euro. Okay, um, I've written kind of ad nauseum about my opinions, the broader kind of macro opinions on the dollar, um, really for several months now. Starting with that special report that we had, in June. If you recall, we did look at, we can see on the long-term charts page, but I do have those long-term, special report links here as well for reasons like this. It's good to keep these front and center so you remember, the fact that it's hard to, remember that you have all these 15-year cycles going on when you're looking at an hourly chart. Okay. At the end of the day, the moves that, I think we probably want to catch are the ones that we go from, 115 or 112 or whatever to 130. All right. And I think that's a distinct possibility. So as we get closer to home here with the short-term stuff, um, yesterday's move really does qualify as a breakout, right? And it's a breakout just from this trend line. It's also a breakout above the August high. If you recall, we did have an August 2nd high. Okay. So, broadly speaking, you've actually broken through the top of the opening range for the month of August. All right. Now, again, this could be a trap as well. But remember, we had the low volatility environment that we talked about, the last couple webinars, and I've written about in the last, updates over the last couple of weeks. And that low volatility environment traps people with the break, which was here. Since then, those, that were short on the break are now feeling the pain. So to me, with the potential outlined in the very broad picture, the possibility of getting a massive, massive breakout, right? Up into the 120s and beyond. Um, I have to take any sort of bullish, activity seriously, right? And this is enough to take seriously. So, hence the, the entry to buy, basically at the former high up here. Okay, I mean it's 112.40, but 112.33 is the high, and again there's slope considerations here as well. To stop under, down here 1150. So that's the Monday low. If we get down below there, it's most certainly a failed move at this point. But there's more to this story too. We've got the the analog, right, that we've been tracking, and the breakout again. If we continue to follow this to a T, which at times it has, the breakout would be the first week of September, which again fits just perfectly with the seasonal aspects, okay, of the dollar in general. The dollar tends to hold its own in August, and then kind of really starts to turn bearish in September. So, that would fit quite well. But I mean, what if it's early, right? You got to be willing to take a chance on a breakout. This is what you're following. And, if it's early, you want to, take that shot. If it ends up not working and it doesn't work, you'll probably be able to try again at some point anyway, right? But, then again, on this analog, this actually suggests that this week's low stays in place too. So even if we do go sideways for a couple more weeks, into the month end, doesn't necessarily mean we're going to fall apart. Okay. So to me, it's kind of a no-brainer as far as taking a shot. You can't be worried about being wrong. Okay. You got to take a shot. When the opportunity presents, and this to me is an opportunity. I mean, one thing is knowing when there's an opportunity and when there's not. But Kareem has a question. RSI is near 70. Is it alarming? I am actually glad, Kareem, that you have answered that question or asked that question, because I'm going to show you right here. You're talking about euro, I'm assuming, yes? Yes, okay. So, and I'm assuming you're talking about daily RSI. I don't know, but I'm assuming you're talking about daily RSI. Yeah, okay. Excuse me. So, all right, let's take a look here. All right, RSI. We're going to look at RSI when its price is above. Let's see, where are we right now? We're above. Let's see, we're not above 70 yet. I think we're above 60, right? We'll look at RSI. Let's see, RSI. Okay, RSI is above 60. Okay, we're not quite to 70, as you can see, but we are above 60. So what I've done here is you can see the bars are colored for when RSI is above 60 and when RSI is below 40. Okay, this actually can work better as a trend indicator, Kareem, than a range indicator, right? So obviously you're going to have tops when RSI is at a high level, and you're going to have bottoms when RSI is at a low level. But many forget that RSI can stay at a low level or a high level for a very long period of time, right? So in essence, a move above 60, which actually just happened yesterday, can be seen as, a breakout of sorts, right? Have there been tops with RSI registering above 60? Of course there have. Okay. But again, if we go into a trending move, which tends to happen after you have prolonged periods of sideways trading, which, as the evidence has shown, we've been through the second longest period of sideways trading in the history of euro. And again, I'm going on the definition of 52-week highs and lows and not making one of those 52-week highs or lows. So uptrends, downtrends. I mean, above 60, you can ride it. Again, maybe this is one of those times. Okay, I don't know, but the reward to risk to me is really big on the upside here with the trend line break that we just had. Right. So looking to buy that, range high, former range high, again, former, resistance. Looking for it to provide support today. And if it does, we could be off to the races for a little bit. There's going to be tests, for this, even if you trigger today at 1240, I would expect that we'll make it red. I would expect that you have resistance, up at this median line, which is very long-term in nature. Okay, this goes all the way back, really, to the 2008 high. Okay, and it's more or less a trend line, but the median line from that structure, very well defined. Again, it cuts through the gap, okay, from January 2015. Gaps are extremely important in my analysis, um, just like highs and lows are. Okay, but that line was resistance 1 year ago, August 24th, right? It was resistance on Brexit. This was a very nasty false breakout right here in May. But that level again should be watched probably about 1365 over the rest of this week, right? So it's not, home free by any means, never really is. All right, but that's where the trouble area might be for euro. Um, so yeah, I've kind of gone through euro here for a while. Let's move on, and then I can take questions. If you guys have any on specific pairs or other markets or something I haven't covered. Let's take a look here let's look at the pound. So we went through and showed the divergence in the pound a couple days ago. I had noted that you got this divergence, right, with RSI. And as you can see, you've had some periods where divergence has worked really well, right? Periods where it's been awful, right? It's not, to me, it's not a trading signal. It's context. Is the momentum behind the move or not? And you made the new closing low here just 2 days ago, and the momentum was clearly not behind the move. So when we combine that with the COT report, which kind of wrote about in depth a couple days ago, combine that with the major long-term slope levels that you've got going on in the pound, kind of giving you a floor, if you will, to trade against. Sorry, just got the hiccups. Then you've got, I think, enough reason to look on the long side. And so with the push higher that we got yesterday, that's why we have orders in to buy cable down here. And I'll go to a short-term chart. Okay, so that's why we've got orders to buy cable basically on, what would essentially be a short-term former resistance line. I know the order's 65, 62 is the high volume level from yesterday, okay, which I guess was on inflation because that was 5 a.m. So that probably came out at 4:30. And that would be that bar right there. Okay, so you're looking for that level to provide support. It might be a little lower. The line during minutes here is going to be, looks like about 29.50, but generally speaking, week open 29.25. Generally speaking, 29.25 to the 65 area is kind of your support zone. If you're going higher, right? It's where you'd expect to see cable find support. And you can just see that by looking at a chart with nothing on it. I mean, where are the highs and lows here, right? A lot going on here, yes? Right, former, kind of support here. Lots of consolidation, right? Lots of congestion, some resistance. Really went through it, kind of flipped the script, right? We're kind of reading the tape here. Went through it, a little dip into this yesterday morning and then took off again. So there's a lot of good energy around this price zone, it seems. And, the minutes, I don't, they're going to come out real hawkish, real dovish. I don't know. But, trading these things for long enough, I know that a lot of times you get pretty good responses to support resistance on these levels, and you can't be afraid to kind of take a chance on it. So, our trade idea is based on a lot more than just say what the minutes are or are not going to say. Right? We've gone through the COT, showed you the major support and stuff from slope that we've got going on here. And here that is. Here's the monthly chart. Okay, you've got 1990, 93, or was it 92, 2001 lows. Okay, literally to it on the tick. Parallel channel with the lines from 92 and 2007. I mean, on the tick, you've got 78.6 retracement from 1985 to 2007. A few ticks below that, and you've even got I guess what you consider shorter term in nature, at least to the ones I showed before. But these downward sloping levels, you could even draw another one. I mean, you could even draw one here. Okay, you could even go this channel, right? I mean, it's there's a million things here, and this is a monthly chart. So, even if you're looking at maybe a move back up into what would be considered former, kind of support resistance at one time, actually back here in 2011, that is still up above, it's 136 area. Okay, not quite 136. Well, it looks like about 135, 70, 80. So, where's the risk? More than willing to put an idea out there to look for a move, up towards 135 when you're trading 130 mid 129s. Okay. All right. Dollar Swiss. Let's take a look at dollar Swiss. This one's kind of a mess to me. It has been for quite a while, but if you look at the daily chart, you actually are following pretty well some of these slope lines. Again, this is just the trend line that goes off of the November high and the January high, and then you have parallels associated with that. So the one that we're trading at right now actually is one that's been pretty solid. I actually published this chart and have not changed it. Published this chart, I think, back in might have been 729 actually, after we get that big down day in the dollar. And said that we were looking for a bounce then. I thought the bounce would fail up here, 97.40.60. Obviously did not. Kept going a little bit higher in the 98.40, and we are right back at it again. Okay, so here we are again. At this point, I have no idea on dollar Swiss. You could make the argument that you've got some sort of a little topping, pattern head and shoulders here, basically since Brexit, right? If that's the case, you're going to get some nasty acceleration to the downside. But, given the range possibilities here, I'm not completely enamored with, say, trading dollar Swiss on the short side in front of big, what looks like, decent support. You've got this trend line down here, which crosses. It's easier to see on the weekly chart. So basically crosses all the important lows since 2011, getting rid of, obviously SMB influence moves, which this is SMB with the Euro Swiss floor, and this here is intervention from SMB back in August of 2011, and just realizing the date of that was actually in August. What was that? August 9th. So interesting. We're gone well past it. August 24th, last year low. Anyway, might be, want to keep an eye on 95.40. Okay, given all the touches that you've got on it, right? Last August, right here. So, for me, dollar Swiss, don't really have much to do there, except, 95.40 is a big one. So even if, I'm of the mind that kind of the dollar gets smoked and the big move is lower, you've got to mind the trend line with dollar Swiss, and that trend line is 95.40 or thereabouts, like 95.50 now. But pay attention to it if it gets down there. What else? I wanted to look at dollar SEK. I haven't even looked at this in a while, but I just kind of came across my mind because thinking about the the dollar, generally speaking, dollar SEK's usually a pretty good leader, right? And we've come off this solid resistance. It's just, just a significant channel. So even here, it would appear that resistance, support is still, it's on this median line. It still looks like a little bit lower. And you're gonna have that trend line. I wouldn't pay attention to this trend line as much as I would pay attention to the median line, right? Um, you see where the lows are here, right? And early in 2016 and even in December. Okay, you got a resistance there as well in March. So I'd pay attention to that level. Looks like about 826. If things kind of start to play out with the dollar heading lower, then 826 would be maybe where Euro's testing 1360, and that's when you might get a little bit of a fight from the dollar. But the consolidation here, very clean. So Kareem here with another question. These are good questions, Kareem. Absolutely, keep them coming. So Kareem saying dollar SEC looks like a bull flag to me, right? And I totally get what you're saying. Okay. Yeah, this is kind of a. Wish I had a longer term chart to look at. Hold on. Let me pull up a longer term chart. So Kareem talking about this looking like a bull flag, and I absolutely 100% understand. And it might be. Okay, I'm not saying it's not. All I'm saying is that you have to, respect the potential that it's also something else. Okay, for example, if we were to look at this chart, this is back in the 2000s. I am almost positive that there was the interpretation back here that this was a bullish triangle, right? And that dollar SEC had to go higher. You could probably have made the case that this was a bearish wedge that was going to break lower, right? Point is, you can have what looks like consolidation actually reverse the move. Okay, you can have rounding tops, right? It's not like out of the realm of possibility. Same thing with the euro, right? How many people probably thought back here that this was actually a triangle before it went lower? It broke higher, right? I've heard that argument time and time and time and time again. Every time I do these webinars, actually, I'm told that, what's going to change your mind on euro going to parity? Look, I'm not pretending to know the future, okay? But I've laid out some pretty good evidence, I think, that points to the contrary, notably those long-term cycles, right? So, to your question, Kareem, dollar SEC specifically, we don't know what this is. All I know is that right now it's a channel, right? Which way it breaks, I'm not sure of, okay? That's why I'm saying if we get to 826, pay attention, right? What if we get down to 826 and this thing, reverses, makes a nice J spike reversal, whatever, okay? Sure, it might be a bullish setup at that point, okay? Let's see where the moving averages are. You're right at the 200-day and the 55-day. Obviously this is a sign of a very contracted market. So I'm not saying that you can't get attempted upside breaks or even an upside break for that matter, right? But how long we stay in this channel, anyone's guess. So, not trying to predict which way dollar SEC is going to break. I mean, euro dollar, I am saying that it's going to break higher based on all the information that we've looked at, and the trade at this point is higher. If it starts to fail and come below 1150, then it's either then we'll take a look at what happens there. But let's see. Leon, if a chart patterns have multiple interpretations with equal probability, to forecast, you really have to use a trade setup, as longer term patterns have too many equal possibilities. Do you agree? Yeah, so I would say this. If your question is if chart patterns have multiple interpretations with equal probability. Well, so here's the thing. I don't even think we can use the word probability, because you don't know what the probability is, right? It's not really a mathematical equation. There's possibilities, right? And that's all we can go on. So, and then after that, the key is putting, the reward to risk in your favor and tightening that risk when you can. Like, let's talk about euro again, okay? Let's use it as the example. So we can use recent trades as an example too. So let's say euro, let's say we come into 1240. All right. Let's say it tanks and we get stopped out. Okay, great. I just lost 1.5, not even 1.5, 1240, 1150 or something stop. Okay. With 1.25 times leverage, which is a quarter trade size under my guidelines. So basically I'm out like not even a little over 1%, like 1.25%. Okay, fine. Let's say that the market hits 1240, goes up to 1365. All right, at that point I'm probably going break even. Okay. And if it continues higher, maybe into November, this thing gets to 125. Well, at that point, hopefully we've got the opportunity to add to it. At that point, you probably, you're already up 20%. You might end up making more than that if you can add to the trade profitably. All right. And if we get up here and then we fail and go lower, stopped at a break even, you don't lose anything. Let's talk about the Kiwi trade. Recent Kiwi trade was short. Okay, got short here, right here, 72.50. Okay, fell down to 71.60. Stop was break even. Two options at that point. Either stopped out, well, it was a 10 pip loss actually. So 10 pip loss, 1.25, times leverage. You're talking about, not even, 12.5 basis point loss, which again is like nothing. So you're either losing more or less nothing, or the potential to go 69. Okay. You see what I'm saying? It's a lot less about forecasting what's going to happen than putting in your position to accept what the market's going to do. Right? Yeah. Yeah, exactly. So Leon's saying that's what I'm saying, like no real edge using either interpretation. Exactly. It's about trade tactics and about, managing the stops and everything. Right? Let's see. We've kind of gone off tangent here. Yeah. Steve, actually Aussie. I think Aussie was next. Or was I still on yen? I haven't even gotten to yen yet. Okay, let's go to yen. So yen, we went nuts on the short term, on the long term stuff. Talked about that giant 5-year average. People might think I'm crazy with that, but whatever. It's shown its colors before at that level. And the interesting thing to me with dollar yen is this. So like you have the mirror image right now of what you had last year at virtually the exact same time, right? You have, that's all this is. This is, and I'll, kind of make it for you so you can see how I did it. But so I have this, okay, and then you make a mirror image of it. Obviously, it's not the same in terms of time. It takes the same form, but not the same time. That's what a fractal is, right? Same form. So you have to tighten it up. right? It's a different scale, okay? And it gets you here. So the scale's different, but the form's the same to this point. Now, this is an inverse this is a head and shoulders continuation pattern. Shoulder, head, shoulder, and there's a target of this on this of 92.48. Okay, that's the possibility that we're looking at. Now, since I'm aware of writing about the 5-year average and blah, 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 and all this other stuff that we've talked about, including percentage below the 200-week average and everything else, it's my contention that this actually doesn't end up happening. In other words, you don't go down to 92.50. And so the way I'm approaching this is that I'd rather just do nothing. And if a market starts to stabilize, like it did last year at this time, but the reverse, then I would consider long positions, especially the real trigger would be a break above 102.66. But in all honesty, if the market actually turns up over the next couple of days, and if it turns up sharply, then I'd be looking at maybe even front running that. And if that were to happen, by the way, then I'm guessing that the dollar idea of the thing breaking down immediately probably proves wrong as well. But hey, I've seen other things happen. Obviously the yen's down from 125 to 100, 25% decline since last year, and the dollar index has done jack. So, it's possible that that something happens with the yen, you get a yen story. I don't know. Okay, but that's what I'm looking at here. Basically, you have, a valid classical chart interpretation of a move down to 92 and change as long as you're below 102.66. Okay, but with my longer term looks here, if you will, on dollar yen. Let's see. On dollar yen. Yeah, here it is. 5-year average RSI, that we talked about all this, right? With the longer term looks on dollar yen, I'm, more or less looking at this as a potential, kind of opportunity to base, but there's no reason to be long here. Okay, if anything, it's a reason to be short, but I'm not really comfortable with that either, so I'm nothing. Aussie. Okay, so Steve asked about Aussie. Yeah, so you talked about Aussie coming into, we talked about the 40. Yeah, so that's what this is. Okay, and you're absolutely right. So first of all, and this is another good example of trade management. So what happened here? We got long at 70. Well, actually, we got long here. We held this level, but we got long here, 76.55. Basically, we were able to catch the low. Market took off 100 pips on the upside, immediately failed, but we were break even. Doesn't matter, right? So even though we were long, for the possibility of a big breakout to the upside, didn't matter because, we got taken out at no blood. Okay, so with Aussie right now, and you're right, what you have right here, is the possibility of, RSI turning back above 40. Okay, I was looking for that earlier in the week. What I'm looking at now with Aussie is obviously a very, very, very long-term test. Okay, I mean consolidation. So you do have, it looks like the 75 40s, you've got a confluence of levels there, simple trend line. So over the next few days to trade this, don't forget, you've got, I think there's employment numbers tonight in Australia. So you could get, some moves off of that as well. Right here, 75.69, that could end up being a short-term level. Okay, you do have 77, which could be a short-term level, and that's simply it's in red now, but it's the former support line. So if the market, came up into 77, that could be resistance. My thing is, Steve, you want to buy it when you're on a support line as well. And that to me is more important than just the 40 RSI thing. The 40 RSI thing obviously is a nice complementary piece of information. So we could be in a situation where we get some sort of a wedge decline here. I don't know. Okay. We haven't held this, so I'm out, right? You're also below the weekly open at this point. The next period is probably 75, as I said, 75.68 for a short-term level. For a daily buy, a bigger buy, you're probably again looking at something more like down here in the 75.40 region. But ultimately, don't forget that we do have this analog here too with Aussie. And the timing period of it, we don't have the same necessarily, scale, but the time period of it warns that you actually could come off here. Okay. And if we did, you might be actually looking at close to the lower parallel again. That said, I like Aussie better than I like, let's see what the gold analog says actually. I haven't looked at this in a while. I like Aussie better than I like Kiwi, put it that way. All right. So what we're going to do is we're going to copy this. All right. We're going to do a 12.17, which is the low for gold. We're going to go forward with this. And we're going to go to the Aussie dollar, and we're going to overlay it. Okay. So we followed it, remember after this was Brexit, we followed it. And since 8.5, we really haven't been following it that well. So we'll be interested to see how gold, trades here, because I still think that you could get a pullback in gold at 12.80. If that happens, then gold turns higher again. Then you probably are a little bit ways off before we can accelerate higher in Kiwi, given the lagging nature of Aussie. Oh, excuse me. Sorry, break higher in Aussie, given the lagging nature of Aussie to gold. Okay, in due time. Okay, so Kiwi. What else is new? I mean, nothing here. What else is new? You got the 1985, 93 trend line. I mean, it's kind of like the only thing that seems to matter on this thing. Might end up being short again here. We're still long Aussie Kiwi. That could end up working. I don't, kind of been waiting for it to accelerate, and it hasn't really done it. But we shall see, I guess. Hopefully get more answers over the next day with the employment and everything in Australia. Kiwi, continues to fail at this level, and I still think it gets down, subjectively thinking it gets to 69 before you can go a lot higher again. Is that going to happen? I really don't know. This is a range. We continue to fail at the top of it. 71 and change is going to be a support area if you get it, as it was throughout June and then early this month. You do have the month open at 71.96. So really, to get conditions that you want to trade on the short side, you probably want to see it down below there. 71.20, then maybe get 72 resistance or so. As the month open, week opens below there, 71.88 or sorry, 71.84. So work in progress here, obviously still with the setup on Kiwi, but something I could revisit again. A lot depends, on what today looks like. I mean, after today, are we finish like this? Are we finish down here? Or we finish up here? I don't know. We'll see. We got to wait for that. Okay, finally, dollar CAD came off a lot more than I thought it would, right? Crude oil went a lot higher than I thought it would too. So, you have to ask the question, is dollar CAD on its way lower? And there is something of an interesting little tidbit here that I'll share. So dollar CAD, you see the magenta dots? Those are dots that indicate basically reaching the third standard deviation Bollinger Band. Okay, now it's the higher low reaching it, not the close. Okay, but still, the higher low reaching it, the close rarely happens, but the higher low reaching it, this rarely happens as well, but higher low reaching it, you do tend to get a little bit of stabilization afterwards, as we have here today. Okay, obviously in this situation, okay, the fake out lower and then higher, that was actually FOMC, I remember, 9/17/2015. You've got, this is more of a similar instance, I would think, breakdown kind of from consolidation, although horizontal consolidation. At this point, we haven't broken down from anything really horizontally necessarily. We're more of a trend line break. You got consolidation, and then you got another spill lower. Okay, and then you got to go back here, which was in a base. Okay, and that was early 2014. And this is more of a breakdown. Okay, 2014 went lower. And after that, it's kind of, you're back in the messy period back in 2012, back here. So, over the next couple days, I would expect to see dollar CAD stabilize like it has today, just like it did in these other periods, even if it's headed lower. Okay, but the levels to watch for if it is going to head lower, eventually, if the bigger move is lower, and again, that's an if, we don't know. If the bigger move is lower, I think you're probably talking about 29.96, which is the Brexit close, and 30.30, which is the month open. And at that point, again, the 20-day average is probably down there. And remember, the 20-day average, when you're into periods of trend in dollar CAD, you do tend to get 20-day average touches before the market continues to trend. Call it the touch and go. 20-day average in the downtrend, right? 20-day average in the uptrend, okay? And you can look further back than this. I'm not trying to be like recency bias here, but 20-day average here, okay, back in early 2015, 2014, 20-day average rode it all the way up, okay? 20-day average rode it up in 2013, 14, what have you, 2013. I mean, basically pay attention to the 20-day average in dollar CAD. For whatever reason, it does tend to work. It has a pretty good history. So that's that. Again, not a huge fan of trading a swing right now in dollar CAD. See how it recovers. I do think it will recover the next couple of days, given what I just said about the Bollinger Bands kind of being extreme on the downside. But would pay attention to it up here, starting really at, let's call it 130. Crude oil has really taken off on the upside the last 5 days. And we're testing, big resistance here. I mean, we're above it now, right, on an intraday basis, this trend line. So is that it as far as the, the lows is that it? Are they in? Tough to say. I think that your best, bet here is to sit out crude oil for the current period. And if you get some consolidation pullback, and I think you probably do for a reason I'm going to tell you here in a bit. But if you get some consolidation or pullback, I'd probably be watching 43 for support. Okay. 43, if I, it's not just the low from over here in May. You've got more there too. Okay, generally speaking, resistance on the way down last November as well. Okay, pretty close to the February low, January low back here in 2015. So I would watch 43. If I pull up a crude oil Kareem, We'll catch the archive. Okay, yeah. So, oh, final question for dollar weakness. Do you favor euro or Aussie out of the two steps? Okay, so this is longer term, probably Aussie, but for the purposes of right now, it's probably euro. I think that commodity currencies are actually kind of on the cusp of taking a little bit of a hit, which would mean Aussie lower, Kiwi lower, and dollar Mexican peso higher. And I'll show you that here in a bit, but you'll have to catch it on the archive because you got to go. Kareem, take care. Enjoy doing whatever you got to go do and catch the archive later. But here's crude oil. I know I showed the 3-day rate of change the other day. This is the 4-day rate of change. We had a 4-day rate of change of 11%, over 11% yesterday. That's, again, throughout the period of the last few years. Every time you get that, doesn't mean you're going straight down. Typically, though, it does mean that you're going to get a period of congestion, okay, or a pause. So, again, that's kind of what I'm looking at here, or looking for. Okay, and to give you a instance and just how rare that is, that hasn't happened, 2015 onward, it's happened a couple times, but you got to go back to the financial crisis days when you got an 11% rally in 4 days, right? So expect the market to cool here, crude oil to dip, and probably happens with the dollar CAD bounce, and then you might actually go back towards playing oil strength off 43 and dollar CAD weakness up above 130, but we'll see. Okay, finally, I wanted to look at dollar rand and dollar Mexican peso before I get into some questions. Dollar rand might be one that really kind of is holding the key to kind of the dollar trade in general, right? So here's the weekly chart. I published this, I think, last week one day, but we do have the really big support for dollar rand is a little lower, but we are starting to turn up now. Okay, which is interesting because you've got the channel down here. Okay, I'm obviously not going off the high from January. That was a crazy spike. I'm going off the January 20th high. And dollar rand has basically been leading on the way down, right? So for me, I would be paying attention to kind of right here. Okay, 1369 kind of is a level to, watch out for resistance. And then you might get that final run on 13 and change, maybe 1290 or so. Okay, and that would be the area to where I think you probably get a bigger bounce for dollar rand. Dollar Mexican peso. Peso is one of the weaker currencies today. Again, probably a huge turn, a huge top in place. Monthly reversal we had in June. Don't forget that. And this could end up being a slope that ends up working out pretty well. For me, this is the same setup as before, even though I was thinking we'd bounce a little bit before now, but we have come in. It's even better actually that we've come into this level because we have the 50 line bounce, and what you end up with is a possibility of getting a move into the confluence. And if you get that, you have 1870 as the month open, and that is essentially where you could end up selling the peso or dollar peso, buying the peso. Okay. So this is your dollar Mexican peso chart, right? Remember, we have a possible double top up here. And 1870 is probably your big spot as far as resistance that needs to hold if you're going to go lower. All right, so we just went through all the dollar stuff, except for the dollar index. And here's that dollar index. Elliott wave. Elliott wave is useful in the sense that you get context, right? So what I mean by that, you can count 5 waves down from the high. okay, into the May low. Well, you can also count 3 waves up from the May low into the July high. And the question is, and I talked about it in the post last night, are we in, so if we go by this, we say we're in a 3rd wave lower from the July high. It could be a C wave, but whatever. 3rd in a sequence, 3 or C. The implication being that you're going down to 11, you're going low. You're talking about 11,000, eventually 11.5, maybe eventually down here. Okay, but either way, it's lower. The question, though, from a trading standpoint, is the high up here on 8.9, is that small wave 2? Or do we have an A, B, C? In other words, do we have yet another trap before we go lower, right? That's what you have to, kind of figure out. And, well, we don't figure it out. Really, the market figures it out. But the only way to get that kind of, I think, as objective as possible is really to pay attention to this line on this chart. So if you were to trade, if dollar index is to trade like this, to trade below here, okay, then you go with the interpretation that wave 3 is really underway, and this line then probably becomes resistance, or at least it's where you look for resistance, right? If you go higher here, then you have what ends up as A, B, C. At least that's the working kind of interpretation of this. And here's your fibs. You can see we retraced 50% already, right? 61.8 is 12.030. I like where we topped, though. You do have this, these levels over here, right? February low and May high. I think you kind of have to like the fact, too, that you already took out, you've taken out everything post-Brexit now, and you got the bounce, and you took it out again, right? So to me, it's kind of a bearish tape. And the risk is lower. But again, it's not really, I guess, confirmed lower until you break down here, and then that's, when you can kind of, I think, get a little more excited about the prospects of really getting the dollar headed lower. All right, so we've got just 5 or 7 minutes until the Fed minutes come out. Are there any questions that I could take over the next few minutes before that happens? And then probably want to get back into the zone as far as trades are concerned. Yeah, let's see. Yeah, Matthew talking about, so the euro and the the European currencies, right, and the commodity currencies, yeah, totally. So here's another way to think about this too, Matthew and everyone else, is that if we're into a dollar downtrend, okay, first of all, the implications investment wise and trading wise are quite substantial. When you're talking about uptrend, does it mean everything goes together at once? Of course not. But like, for example, you see emerging markets outperforming at times, right? You see gold outperforming at times. You'll see orange juice outperforming at times. You see, you name it, different commodities. Think of it as like a relay. They all take the baton and they all take their turns, right? And the same can be said with FX. So on balance, to be dollar bullish, fine. There's going to be moves in the other direction. We all know that. At times, European currencies are going to outperform. At times, commodity currencies are going to outperform too. Okay? At times they'll underperform, right? Recently, we've had big outperformance in commodity currencies. Just look at pound Aussie or whatever, right? We looked at that. We have that one here. It's a great chart. That's not it. This is it. Pound Aussie, right? Commodity outperformance significantly. You're at the end of this move, okay? You have two equal legs down from a year ago, almost, at 65.99. You even have 5 waves here, okay? You might need, as I said yesterday, one more test. 1, 2, 3, 4, 5. One more test before this really gets going. If that happens, then it's going to be probably, I would guess, it probably means you get one more Aussie spike into the highs before a failure. That would be what my guess is, because this is going to be more driven, typically, not always, obviously, of Brexit, but this is typically driven more by Aussie than by pound. Typically, not always, typically. Okay, so yeah, you're going to have different periods where there's outperformance in some currencies versus the dollar, and than others. No doubt about it. All right, so I'm going to wrap it up here. I'm going to get this Matthew about Aussie Kiwi. Yeah, so Aussie Kiwi, looking at a C wave of a pennant on the daily chart. Yeah, so Aussie Kiwi, as you know, I like that higher. I like the trade at least. Don't know if it'll work. Look, we actually had a trend line today. I actually didn't realize that. So that's nice. So what are you thinking? A, B, C higher, or are you thinking it goes? What are your thoughts on this? I mean, I like the fact that you did hold this trend line. Month open here is 105.22 as well. If we're building a channel here, to work higher, you kind of have to. I mean, this is it. There's really nowhere else to go. This is this is it as far as the as far as the downside's concerned. Well, yeah, yeah. So you're looking for one more drop, I guess. Yeah, this is one that I want to keep trying. I like this kind of show of strength, weekly bar here, and this outside week here early in August. Obviously, we need to hold it. And the bigger resistance up here. We'll see. All right, 2 minutes till Fed minutes. I'm going to let you guys go. I got to run. But good luck. You know what I want to do. I want to see if I can get some good entries on dollar shorts. Otherwise, it's continued traps for August, and we'll have to revisit again at a later date. But that's it for me for right now. So have a great one, everybody. Thanks for attending. I'll get this archived up here as soon as possible. All right, take care. Bye.